In the meantime, we continue with the news and we're going to look at the economy. It's been a year of economic ravages. The hard lockdown in South Africa wiped out many small businesses, and when the first stats came through, it emerged that 2.2 million people had lost their jobs. For a retrospective, we're joined now by Owen Nkomo, CEO of Inkunzi Wealth Group. Owen, thank you for being with us. Sorry, even investors and bankers have to be at home tonight, Owen.
Yeah, we have to, Francis. We have to be at home and respect Mr. Tsele and the president and make sure that we don't foster any further infections out there.
This second wave, this new variant, I mean, economically, it's devastating. People are losing their lives, but economically, there was hope of a recovery. There was hope that the worst had passed us. 2021 would be better. Is that all out the window now?
No, look, I think it's essentially, in my view, a case of there's probably more problems for the economy than we had calculated, given this current extended lockdown for level 3 that the president has just put us on. Rightly so as well in my calculations. But unfortunately, it means that people have to go back to the drawing board. All the plans you had for January, and it is for the first quarter, you might probably have to adjust them differently. And I think the big underlying influence of what next year will look like is going to be the all-important issue of the vaccines, when they get to our shores and when they start getting distributed, and what influence they have on how we can get back to work. Yeah. The sooner that happens, I think the better off we can look at how year 2021 will look, Francis.
Well, the government is only talking about the second quarter of next year, even though vaccines are being rolled out in other parts of the world. Although in the United States, they're being rolled out so slowly, that's a huge problem there, making no difference at all. Is it all very disappointing?
Look, it is really disappointing, and I think that from my perspective, because we don't control the production and the delivery of these vaccines, we really, to be truthful, these vaccines will get to our shores when they get to our shores. There is no telling the real date of when that will happen. The president has estimated that the second quarter is when we'll get them. What happens if by the second quarter, these things are still hot commodities and the world can't produce enough for people like for us in South Africa to get those vaccines? Francis, I hate to say this, but there's a possibility that we might probably be getting these things in the third quarter, which hopefully doesn't lead to that, because what Mr. Stephen Saad working hard at Aspen, I think, and the other pharmaceutical CEOs in the country trying to get the vaccine into South Africa in time for us to just get our share of the vaccine.
Could it be as bad as we thought the recession would be over, there'd be some economic growth in 2021, but now there may be another massive contraction, meaning our economy is just getting smaller and smaller, and people are getting poorer and poorer?
Look, I really think that's a very big possibility, Francis. I'll give you a practical example from some people I've been speaking to. The guys are saying they are not sending their staff back to the office until the end of 2021, where they think they'll have a really clear picture of how things look post-COVID, or maybe COVID will have changed to COVID 3, 4, 5. So it's really very difficult for us to make decisions about the next year, or maybe even the following year. We just have to keep things. We just have to keep things by the ear, Francis. Because
economists and investors hate uncertainty. Owen, you often follow the markets for us, and people, some of us, scratching our heads on the markets. Sometimes there have been record highs, a lot of that about stimulus plans around the world. But can you explain for lay people why there's been, throughout this year, seemingly such a disconnect between the real economy, what's happening on the ground, and the markets, even the rand looking good despite COVID and the dreaded downgrades this year?
All right, so for us, it's been mostly an issue of the rest of the world decided not to sell their equity markets. They instead bought these markets because to try and help countries and companies and individuals deal with their economic challenges, there was a decrease in interest rates globally. So what that means is that people took their money out of their investment interest earning account into accounts that are linked to the stock markets, because the stock markets have been rallying. So to have things like cryptocurrency, that people have started to believe that those are safe havens. So now the money is being moved into equity markets, away from the banks, away from the markets that give you interest at a very low amount. Just like in South Africa, we're seeing our repo rate sitting at 3.5 odd. People just would rather take their chance, put their money in the stock market. And the currency has been pushed higher by the fact that the US dollar has fallen, and a weaker dollar has, obviously, because America does export quite a bit, it has pushed the stock markets in America into record highs, particularly led by the technology stocks there.
But the big question, the final question is, how long can it last? If the fortunes of companies is what drives the markets, and those fortunes ultimately will be affected by how much people have to spend for their goods and services.
Francis, I think that would have been an ideal answer maybe 10, 20 years ago. But right now, an appropriate answer is this will last as long as America's printing machines can continue to print money. They just recently printed $900 billion to plug into the U.S. economy to avoid the economy coming to a standstill there. As long as America can print money, as long as the rest of the world can continue to maintain lower interest rates, I do believe that stock markets will go up. But how long that lasts, you and me hopefully will be alive to see the impacts of inflation someday down the line, because I do think that this aggressive printing of paper and this aggressive decrease of interest rates potentially down the line, maybe not necessarily next year, will come back to bite us in the back. But it's a mechanism that we have to use at the moment to deal with the potential of economies collapsing and markets collapsing aggressively as well, Francis.
Yeah, but like you say, some people scared about sort of this disconnect, this artificiality created by those huge stimulus measures. All right, thank you very much. An interesting look back at the financial year. Owen Nkomo, CEO of Inkunzi Wealth Group.